In this video, guys, I'm going to share with you my 4-hour strategy that I personally use to profitably trade the Forex market. Now, not only does this strategy generate me thousands of dollars a month, it also helps my clients profitably trade the financial markets, generating a primary or secondary stream of income in just a few hours a week. So guys, grab your notebooks and let's get stuck into it. So here we are on the charts. And essentially this strategy is comprised of 5 main parts, and I'm going to walk you through them very quickly, and then we're going to look at a few examples. So firstly, we're going to look at the 4-hour time frame, and we're going to look at the 4-hour market structure. So is the market, is the market making higher highs and higher low points like this and trending upwards, or is it, forming lower lows and lower highs and trending downwards? Next, we're going to use the basic concepts of support and resistance. We're going to find, if the market is trending up, we're going to find the previous resistance. And, we anticipate that it's going to act as support, because when resistance is broken, the market usually comes back to retest that level as support before continuing on with the trend. Similarly, in a sell setup, we want to look for a previous support level that was broken to act as resistance. Once we have a lower low, we want, the market to retrace and test our previous level of support as resistance before its next impulsive wave to the downside. Now, also along with the market structure and support and resistance, we want to see, after an impulsive wave, at least a 50% retracement on our Fibonacci retracement tool. So if we're in an uptrend, we want to pull our Fibonacci from the previous 4-hour low to the new high point as we have here, and we want to see at least a 50% retracement lining up with our previous resistance level that was broken, acting as support. So now we have a nice area of confluence here after our impulsive wave. Here's the correction, and now we have a nice area of confluence where we anticipate that the market will commence its next impulsive move upwards. Similarly, in a sell setup, we want to use our Fibonacci tool, and we want to use it from the previous high to the new low, and we want to wait for at least a 50% pullback with confluence with our previous support broken here, acting as resistance. Now guys, if 50% comes before the zone, we want to wait for a level of confluence with the zone. So here you can see the 6180 lines up nicely with the zone, and 50% is a bit premature. So I will personally always wait for the deeper zone, an area of confluence. Now once we have our 50% retracement on the market, we then want to look for candlestick confirmations telling us the market is reacting to these levels. So if we're in a sell setup here, we want to see rejection candles, candles with long upper wicks, or engulfing candles, or indecision candles to the zone. Similarly here, if we're looking at a buy setup, we want to see candlestick patterns showing us buyers are stepping in at this level. And then finally guys, we'll go to the 15 or 30-minute time frame for our entries, exits, or stop losses. Alrighty, so let's take a look at a couple of examples. So firstly, here we are on AUD USD, and the first thing we want to do is we want to ascertain the trend of the market structure. What is the market doing? Is it forming higher highs and higher lows as such, or is the market forming lower lows and lower highs as such? Nice and simple, nothing too complex for you guys. So let's break this down here. Here you guys can see the market previously was forming a high, a low, a lower high, an even low, an even high, an even low, a lower high, and now we have a lower low. We are breaking the previous low right here. We're forming a new lower low. So let's see where this low establishes itself. We can see we have a lower low here. So now where's the previous level of support that was broken? That's this level right here. I will always mark it from the closure of the candles to the wicks, just like this. And then, I will mark this as the previous high right here. So I know now if the market was to do this and break the previous high as such, break this high, we would anticipate this resistance to act as support for the market to continue in its upwards direction. So we know we draw this level. This is our last point of interest before the trend reverses. And I will mark this as the new low, because this is what we're going to be targeting for our target. So now guys, essentially we have our support and resistance levels, and then I will pull my fib from the previous high to the new low to see our zone of interest. Now, as you guys can see, 50% comes before the zone. So I'm personally going to wait for the 61.8 because it's a simple matter of risk management here. If we were to take a sell here, we're gonna, I always risk 1 to 2%. So if I'm gonna take a risk here, I'm gonna risk 1 to 2%, and there's the possibility that the market's gonna push further up here. And your job as a trader is to buy low and sell high, as cliche as that sounds. However, now if I'm gonna take a risk on one setup, I'm taking the same risk. So I want to take I want to wait for the maximum reward. And here, obviously, the move is from here down is this much, and the move from further up gives me a larger reward. So if I'm going to take the risk anyway on one setup, I rather wait to sell at the highest possible area of confluence, so I have the maximum reward, and therefore the probabilities are in my favor. So now here we are, we can see, okay, we're waiting for the zone. So I'm going to get rid of the Fibonacci here, and I'm going to play the candles through, and we know what we're waiting for. So here we come into the zone, and now we want to wait for candlestick rejection, engulfing, indecision patterns. And here you guys can see, some sellers are entering, but this is not clear enough for me. So we want to see some bearish candlestick pattern. So if you guys look right here, we can see, the sellers are stepping into the market. If you look here at the volumes, this volume on this candle right here is, way higher than the previous 4-hour candle. So this shows to me the sellers are stepping into the market. Now I will go to the 15 or 30-minute time frame. I'll go to the 15-minute here, and I want to see, a clean break and retest of the market structure. So looking at this, we have a high, a low, a high, a low, a high, a low, a potential head and shoulders, and a lower low forming. So I want to see a lower high to take the sell, targeting the previous 4-hour zone. Nice and simple. So let's see what we get here. I will mark this level as such, and I want to see a pullback into this level to take a sell on the candlestick confirmations. So here we go, we have a pullback coming in, and you guys can see we have some rejection candle right here. So I will take a short position on the closure of this candle. I will set my stop loss something like this above the previous high, and I will set my target down below here to the 4-hour low. And you can see we have 5.83 risk to reward. So if you risk 1%, you make 6%, you risk 2%, you make over 10%, so on and so forth. Now I always like to pay myself at a level, so I will pick this level right here. And once the market reaches this level, I will move my stop loss to break even, close half my position, and leave a runner to my target. So looking at this, we have a reaction, and boom, we hit our partial zone. So I will move my stop loss to my entry. Now I'm running risk free, and I want to see lower lows and lower highs occurring to our target. And let's see what we get here. So this just keeps going, and we just get a full target here. So there you have it, guys. The power of this strategy on the 4-hour, because we are using really strong confirmations to take our trades. We're not blindly trading, and we have a real method to the madness using price action. Because when you use price action, guys, you understand the sentiment of the market, and you can trade accordingly. You're not waiting for any indicators which lag behind, and your timing is always on point. So our next example here is on Euro AUD. And as you guys can see, the first thing we want to do is break down the market structure on the 4-hour. And looking at this, you guys can see this has been making higher highs and higher lows. And here we have a new higher high. I want to see a higher low retesting this level of resistance, targeting the previous high here. Nice and simple. So I will mark out my previous level of resistance right here. And if you guys notice, I'm only interested in the most recent price action. I'm not interested in zooming out too far. I'm trading the most current trends in the market. I will mark this as the previous low right here as such, and I will mark this as my target zone to take my profits right here. Now what I want to see, guys, is obviously resistance is broken here, acting as support. And I want to see some 4-hour confirmations around this level. I will pull my Fibonacci from the previous low to the new high to take a look and see where the area of confluence is. And as you guys can see, it lines up nicely with the 70-50 level. So I will wait for this level. I will not jump in at 61.80. I will not jump in at 50%. It's all about discipline and patience, guys. And if the market doesn't come to where you're looking at, you don't take the trade. It's that simple. So looking at this, we're in the zone, and now I want to see, you know, some form of indecision, rejection, or engulfing candles. And here you guys can see this is an indecision candle. Now when I see this candle, what it tells me is on the shorter time frame the market is going sideways, and I'm going to wait for a break and retest of the structure to go long here. So let's go ahead and take a look at the 15-minute time frame here. So here we are on the 15-minute time frame, and you know, breaking down this market structure, guys, you guys can see we had a low, a high, we have a low. Now we need this to evolve a little bit. So we have a higher high, higher than the previous high, and then a higher low to, you know, go long. And this way we are riding the very beginning of our 4-hour trend using the 15-minute or the 30-minute time frame to get our entries. And now we play this through. Let's see what we get. So here we get a higher high here. We get, you know, here's a high, a low, here's a new higher high. We want to see a pullback to go long. I will mark this level out as such. And, you know, you guys can see we have an asymmetric head and shoulders too. Here's the left shoulder, the head, the right shoulder, the higher high, the break of the neckline. And we want to see a pullback here to go long. So what do we get? We come in for a retest. And, you know, we're waiting for our zone, The market is, you know, reacting around here. And honestly, I will go long at this level right here, because if you look here again, you know, on the volumes, you can see we have a volume spike, you know, a higher, stronger bar than the previous bar. So, you know, it's telling me that, you know, buyers are stepping in. And also the risk to reward is so huge here that, you know, waiting for this little bit, it doesn't really make too much of a difference on this occasion. And I would target the highs up here. Again, you guys can see we have over 6 in the risk to reward, meaning you risk 1%, you know, you stand to profit 6%, you risk 2%, over 12%, so on and so forth. And this is the key to profitable trading, guys. High risk to reward with good accuracy you'll always remain profitable. And I will look to pay myself, you know, at an area of contact, so something like this. I like this level here. And let's see what we get here. We have a high, a low, a high. I'm calling the high, a low here, and we want to see something like this occurring to our target. And we get, what do we get? So you can see we retest, and then boom, we shoot up. At this point, I will move my stop loss to break even. I will close half my trade. And I essentially want to see, you know, the market might go sideways here, and then, you know, form higher highs and higher lows to our target. We have to just stay in now at break even and see what happens. It's pulling back, and on this occasion, boom, we are taken out at break even. However, you know, this looks to me like a higher low before, yeah, the continuation. But that's all right, guys. You know, we can't foreshadow what's going to happen here, and we made such an impulsive move that, you know, we have to respect the rules of our strategy. So there you have it, guys. My 4-hour strategy that I use to take high probability setups on the market, and that my clients also use to generate an income in just a few hours a week. I've given you guys a quick rundown in this video. So as always, guys, if you guys found any value in this on this video, please smash that like and subscribe button, follow the channel, and let me know in the comments, you know, your thoughts, and if you have anything to add to my 4-hour strategy. I'll see you guys in the next one.